All right, let's just jump right in. One of the questions I get asked all the time is, hey, how do I actually start investing in crypto with a smaller amount of money? Well, today we're cutting through all the noise. We're going to break down a simple, no-hype blueprint to do exactly that.
So let's play a little game. Imagine you've got a cool $1,000 right now, ready to go. The crypto market's buzzing, opportunities are everywhere, so where in the world do you even begin?
Well, look, this isn't just some theory. If I were in your exact shoes, with that cash in hand, this is the precise strategy I'd follow. No guesswork, just a clear, actionable plan.
And trust me, having a plan is everything. So many people just jump into crypto, they get swept up in the hype, and they lose their shirts because they're basically just gambling. A real strategy, that's what separates smart investing from just rolling the dice. Okay, so here it is, the whole game plan at a glance. We're going to build what I call an investment pyramid. You can see we're splitting our $1,000 into 3 layers. 50%, that's $500, goes into a safe base. 30%, $300, is for growth. And that last 20%, $200, is for our high-risk place. So let's break each of those down.
First things first, and honestly, the most important part, the foundation. I mean, you wouldn't build a skyscraper on sand, right? So you shouldn't build your crypto portfolio on shaky ground either. This safe base is absolutely critical.
We are putting a full half of our capital right here, $500. This chunk of money is dedicated to one thing, and one thing only: building a strong, secure base for everything else we're going to do.
So what's the point of this layer? It's simple: to protect your money. Think of this as your portfolio's defensive line. It's designed to be the most stable part and to shield your investment from that wild crypto volatility we all know and love. So what actually goes in here? The big dogs, the established giants, Bitcoin and Ethereum. These are basically the blue chip stocks of the crypto world. They've been around forever, they have massive, secure networks, and they're widely seen as the safest bets in the entire space.
Okay, so our foundation is solid as a rock. Now it's time to add the next layer up: growth. This is where we start looking for more significant returns, building right on top of that secure base we just made.
For this second tier, we're allocating the next $300. You can think of this part as the growth engine of your portfolio.
Now the goal here is totally different from our base. We're not just looking for stability anymore. Here, we're hunting for projects that are already well established but still have huge room to grow. They're not brand new, but they're not at their peak yet either.
A perfect example for this category is a project like Solana. It has a proven track record, a strong ecosystem, and a clear use case. But it still has that potential for explosive growth that could really outperform Bitcoin or Ethereum in the right market.
And that brings us to the very tip of our pyramid, the final $200. This is the high-risk layer. And believe me, it's the smallest portion of our investment for a very good reason.
This is our high-risk, high-reward moonshot money. This is for exploring newer, smaller projects, maybe things in trendy areas like AI or crypto gaming. This is where you might find those incredible 10x or even 100x gains. But, and you gotta listen to this, you must be prepared to lose this entire amount. It's a high-stakes play, which is exactly why it's the smallest part of our portfolio. So now that we've built our smart strategy, let's talk about the single biggest mistake new investors make. They essentially take this beautiful pyramid we just built and they flip it completely upside down.
And this slide says it all. On the left, you've got our smart, diversified pyramid. On the right, you have the mistake, going all in on one single, often super high-risk coin. That's a concentrated bet, and it can wipe you out completely.
So if you only take one thing away from this entire thing, please let it be this: concentrating all your money into a single asset, no matter how amazing it seems, is the fastest way to lose everything. It's a mistake you just can't afford to make.
To wrap all this up and make it super easy to remember, this entire strategy really just comes down to 2 simple but incredibly powerful rules for success.
And here they are. Rule number 1, diversify. As we've seen, spreading your investments across different assets is your best defense against risk. Rule number 2, take profits. Don't just sit there and watch the numbers go up. Have a plan to sell small pieces as your investments grow. This locks in your wins and protects you when the market eventually turns, which it always does. And there you have it. We went from a simple question to a complete structured blueprint. You've got a strong base for stability, a middle layer for growth, and a small bit at the top for those high reward plays. That is exactly how I would approach investing $1,000 today. So the plan is laid out and the logic is clear.
It's a strategy designed to manage risk while still capturing the incredible potential of this market. So the final question is for you. Now that you've seen the blueprint, would you follow it?